Oh no, the sky is falling. And it's actually, as I'm making this video, much worse than what we're seeing here on coin360.com. But hey, I just want to recap because I've been calling for a lot of the things that are happening right now to happen. Last week, what I showed you in my video was an expectation that we were going to have some kind of interaction with the bull market support band, 21-week EMA, 20-week SMA, the 200-week simple move, 200-week simple moving average, which we are right now below. I do expect this on a weekly candle to be a wick, and so that will hold that as support. But and then worst case scenario that we would get down to the 200-day simple moving average, which if we did, we would most likely see a weekly close below the 200-week simple moving average. But I've been calling for this. It just, when you see something like this, you see us go too far gone from the bull market support band. It tends to work out that gravity will just pull us right back down. And I think that that's what's going on right now. I don't think we're going to get to the 200-day simple moving average. I do think that would be worst case scenario, and that would be a great place to buy if that's the case. But I've been calling for this. The previous video I made, Bitcoin video I made, it was almost a month ago. Actually, it might have been more than a month ago. I called for a move back down to these levels here, this $25,200 level. The top of we saw a huge resistance there. That's from several months ago that I drew those lines, but huge resistance there. I thought we would find some support there. We have not gotten down there yet. I wouldn't be shocked if we had one final move down and maybe a little bit of a rounded move, but again, a holding on a weekly candle of the bull market support band and of the 200-week simple moving average. That is what I think is going to happen. You can see this more clearly on a different chart here. You can see that was a perfect time to have bought during the crisis. I don't want to call it a crisis, the Silicon Valley Bank fiasco, right at the bottom of the bull market support band. But that was also right at the 200-day 200-day simple moving average. So we bounced right off that, went higher. So what are we going to do here? We're going to hold the bull market support band, or is the 200-day simple moving average the one that we really need to pay attention to? Given the confluence of the 200-week with the bull market support band, my tendency is to think that this is about, we can go a little lower, wick a little lower. This is about as low as we're going to go with the price of Bitcoin. I am an eager buyer. I'm kind of an eager buyer. I need to pause real quick. I am kind of an eager buyer. The reason why I'm a little bit more hesitant, if I'm a trader, I'm an eager trader right now. Just waiting for it to get a few $100s lower. I have a bid set right there. But the thing that gives me some kind of a pause, and I'm looking throughout the rest of this year, and I'm just not too sure as to how much higher we're really going to go. Last week, I said that I think we have one more leg up, that $31,000 was not the peak for 2023. I do stand by that. I do believe that we will cross $31,000 some point the remainder of the year. But right after I made that video last week and hit publish, I decided to check out the DXY, which I should be checking out much more often than I do. But I decided to check out the DXY, and I saw some things. I just saw something here that was a little bit alarming to me. And that is simply that we are above, again, the 20-week SMA, the 21-week EMA. I typically only think of this as a Bitcoin thing, but if you look at the DXY from about 2020 until now, look at that. I mean, if you can see that on my screen, we broke through that June of 2021. We broke through to the upside. If you remember, that was the time of quote unquote transitory inflation. That was the thing that the Fed was pushing on us. And you can see just perfect bounces all the way up. This is this really looks like the 2016, 2017 Bitcoin chart. Just perfect bounces off of these EMAs until we got to a point where we're too far gone. Just like in 2017 when Bitcoin, went parabolic to $20,000. And then we got too far gone. We couldn't hold for the DXY, and I say we, meaning, I'm not in favor of the DXY pumping. That has nothing to do with the US dollar giving us buying power, not at all. It's just a measure of fear and greed. That's all that it is. And so you can see, so then we went straight through below, and then the EMAs here, not the EMAs, the 21-week EMA, 20-week SMA turned into resistance. And so it became resistance. But here we are today. and we're right back above it. And are we going to hold this as support? This to me is a sign that people are fleeing back into the dollar. The dollar isn't as unreliable as it was when the DXY peaked in September of 2022. I mean, that was right around the point of 9% inflation. It's not as unreliable. We're only, a little under, according to the CPI report, at least, which is utter nonsense. We're only under 5%. And so perhaps the DX or the US dollar is a little bit more attractive right now for some people. And when we're talking about people all over the globe, this would be a bit of a cause for concern. If we breaking through that, we did see Bitcoin rise to $69,000 in 2021 as the DXY was slowly climbing. I mean, we can see November of 2021, it was slowly climbing. It bottomed out at 88, I believe, or 89 in May of 2021, did a double bottom, but then DXY at 94, Bitcoin peaked at $69,000, almost 95. And so we can see, and that's why I do think, there is a potential environment for another leg up, but if the DXY is moving up, then in general, you should think that Bitcoin will move down. So my guess is that over these next few months, if we're going to see it, it would have to happen fairly soon, and that Bitcoin would peak maybe mid 30s or something like that, and then go back down to the 20s, maybe even the teens. I don't know, at the end of this year, early next year. And then we'll see about what happens after the next Bitcoin halving. That's what's on my mind. And that's why I say, I'm not a majorly eager buyer right now if we don't have a ton of room to go to the upside. And, I could be wrong. Maybe 31,000 was the peak for 2023. I don't think we have a ton of room to the upside this year. I'm not an eager buyer for long-term holding at 25. I do think that we could eventually get better deals later on. But, as a trader, if I'm a trader, I'm just throwing some money, some low leverage, 2x, 3x leverage. I think now's a great time to be buying Bitcoin. There's something else I want to point out, man. It's weird. It's like we could, over the next couple years, see Bitcoin do very well, see cryptocurrencies do very well. And at the same time, we have this looming collapse of something that is coming at some point. And I hate to say it like that, because it really could be next year, or it could be in the 2030s or 2040s. But this Zero Hedge article, this is in many ways the most trustworthy news source, even though they're very dark. I love to go to zerohedge.com to see more realistic news instead of the nonsense that we see on CNN, whatever, Fox News. I have no preferences to the liberal leaning ones or conservative leaning ones when it comes to economic factors in particular. But the debt ceiling crisis is over, and now U.S. debt will rise from 31 trillion to 50 trillion by 2030. And that seems like an alarming article title, and the article just points out, it's not. That's not clickbait. That's reality. I tweeted out a couple weeks ago that this debt ceiling thing was going to get resolved. It always does. It always will, until the United States collapses. I remember in 2010 hearing all this alarmist stuff about the debt ceiling, getting a little bit nervous, and then realizing, wait, they're always going to raise the debt ceiling. Always. They will bipartisan always raise the debt ceiling until we're just finished. And in some of our lifetimes, that's going to happen. The US dollar will collapse, and who knows what's going to come with the rest of that as far as economically, but things are going to get much uglier, and in particular, much more difficult for poor and working class people who don't own any actual assets. They are going to get annihilated. Maybe I'm too strong here. But what does the politician have to say about this? No one got everything they wanted, but the American people got what they needed. Okay, Joe Biden, right, worst president of all time. I've said that before, I'll say it again. We averted an economic crisis and an economic collapse by raising the debt ceiling. Nothing Nothing would have been more irresponsible. Nothing would have been more catastrophic. Okay, so all we're doing is kicking the can down the road, as we always do with this debt ceiling garbage. But here's the thing I really want to point out here. I'm going to take, I have this chart open in another window, but what will hold their attention is the inexorable expansion of our extraordinary debt, which is set to rise from 31.4 trillion today to 50 trillion by 2030. That's only 6.5 years from now. 6.5 years is nothing. And then really take off, assuming rather benign economic and market conditions, which we know rarely persist uninterrupted. So let's take a look at this chart here. So this is federal debt held by the public as a percentage of GDP. So this chart looks pretty bad, but when you factor in that this is a percentage of GDP, it's so much worse. Oh my goodness. Well, all right, let's continue reading here. The federal debt held by the public is projected to rise from 98% of GDP in 2023 to 100% by 2033, an average increase of 2 percentage points per year. Over that period, the growth of interest costs and mandatory spending outpaces the growth of revenues in the economy, driving up debt. Those factors persist beyond 2033, pushing federal debt higher still to 195% of GDP by 2053 when I'm 71 years old. And I will care still because I have children and most likely will have grandchildren at the time. Debt is projected to rise in relation to GDP, mainly because of increasing interest costs. That's very important. And the growth of spending on major healthcare programs and Social Security. And so, you know, Medicaid, Social Security, those are big parts of the pie when it comes to the federal budget. The U.S. military obviously is a very big piece of that pie as well. But I've said this, I've been saying this for over a decade now. The biggest threat, the thing that will end up killing the U.S. dollar is interest, the interest alone on our national debt. If you look at the piece of the pie, you do a pie chart for federal expenditures, what you will see right now is a small piece of the pie is interest, but that is growing at a dramatic rate. And there is a point, probably not in my lifetime, maybe in yours, most likely in yours if you're in your 20s, where if we continue this way, interest alone on the national debt is going to be greater than our GDP. And that's probably the breaking point. Because, you know, who would want to hold our debt? Nations, individuals, whatever. Who would want to hold our debt if the interest alone is greater than GDP? There is no more pretense of being able to pay that off. I've been using air quotes way too much in this video. There's no more pretense. So, I mean, guys, you've got to be acquiring assets. I have a house right now that I never intend on selling. Never, ever. And I will buy and I will never sell. And I'm not talking about crypto when I say that. I will buy land. I will buy gold. Gold is going to explode pretty soon. I will buy Bitcoin and I will play the game when it comes to crypto, when it comes to altcoins, you know? And so what am I loading up on? Eventually, not right now, but IMX, Jasmy, Cardano, Dogecoin, Shiba Inu, probably some Solana, and there's plenty more. Casper, that's another one. I'm trying to think to my Would I Buy series, which ones I was most excited about. Those are the ones off the top of my head. Ethereum, Bitcoin, obviously, Litecoin, obviously. That's why, you know, I'm not going to say the obvious ones, except I just did. But I'll play the game with those. I'll dance the dance. Buy low, sell high. And doing a covered call strategy that I'll make another video for with Bitcoin correlated stocks. But you've got not financial advice, of course. If you are struggling right now to make ends meet, what you've got to understand is that it is only going to get more and more difficult for you to do so. The days of our grandparents, our parents, increasing their wealth in comparison to, you'll increase dollar amounts in your net worth, but that may not increase your actual wealth in comparison to the cost of living. And so you've got to get ahead of this, not financial advice. Anyway, that's all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.